Hey, Tom, I'm going to share my screen with you and get your comments on a few things that we've chatted about. Here's Fitch cuts the U.S. credit rating to AA+, and the Treasury calls it arbitrary. I know you laughed at that.
Yeah, I always laugh. They have to make some sort of comment about this, I guess. I mean, arbitrary. Okay. I mean, Fitch, Moody's, and Standard & Poor are the big three rating agencies, and they're expected to be in charge of deciding whether or not, corporations and sovereign governments' credit rating is AAA or somewhat less than that. So for them to actually step in and actually announce a downgrade to the credit rating is significant. It's not arbitrary at all. I don't know where they get that idea from, but it's anything but.
Yeah.
I mean, it may be arbitrary in their mind, but the reality is if that sticks, I mean, I don't know how much power Fitch has to make that stick so that somebody has to abide by that. But if true, what it costs, well, our government has payments too. They have payment obligations, and now all of their interest-based payments just got more expensive, because that's what happens when you get a rating downgrade. It's like an average person's credit score. If you have a 780 credit score and someone else has a 600, the person with the 600 credit score pays a higher interest rate. It's just the way it works. So it's, if true and if it sticks and they have to abide by that, that's a big deal. It's costly for the whole system.
It is a big deal. And it's just so arrogant to say it's arbitrary, eh?
Yeah.
Wow.
As soon as I saw that, I just had to start laughing. Arbitrary. Okay.
Nothing to see here.
Yeah.
Nothing to see here.
Is that a legal distinction, arbitrary? Is that got legs?
Yeah. All right, I'll share the next one. So here's what Janet Yellen had to say about it. Treasury Secretary says to expect a gradual decline in the dollar share of global reserves. However, but the greenback remains dominant.
Yeah, there's another red flag, world dominant. I thought it was the only currency of global trade for the most part where it counts, right? So what is that suggesting? That there's something going on? Is there some movement away from the dollar on some scale that you have to say it's dominant still? I mean, you got to read between the lines sometimes with these headlines, right? And say, what are they not saying with what they are saying? Well, you have to know a little bit about what they're up to too, right?
Yeah, which you do. She's expecting a gradual decline in the dollar share of global reserves.
A decline? What's this all about, right? Could this be the de-dollarization, BRICS nation narrative that's going on? That's been brewing for...
And her admitting it is a big deal. Another big deal that we're hearing it from her.
We've got a customer. Okay. I'm going to pause.
So here's her next statement. When asked if the dollar's international status is declining, Yellen says she sees virtually no meaningful workaround for most countries for using the dollar as a reserve currency. I just want to stop there, because here she's saying expect a gradual decline, right? But here she's saying, well, I don't see any workaround. Kind of contradicting herself.
Yeah, that is a contradiction for sure. I mean, if there's no meaningful workaround, then where's the decline going to come from? So
and then she's also, sorry, go ahead.
Well, it's almost like they want, in their own way, to avoid bringing up the elephant in the room, which is the BRICS nations. Yeah. They definitely are not going to use that terminology, because that would cause people to go over and start looking over the fence and see what's going on, right?
And she's saying most countries. So there's a hint there too. Oh, gee, there might be a few. We should expect over time a gradual increased share of other assets and reserve holdings of countries. So now she's saying we should expect. You see all the contradicting?
Yeah, it's extremely contradicting if you take the time to break it down. But I mean, this is the thing. Most people don't take the time to even look into these things, and they're just managing news right now because they know there's a story out there, I think, and they really don't want people talking about it, because the more you talk about it, the more energy you give to it, and it's a big deal. I mean, 70% of the world's population is moving towards this BRICS alliance right now, And I mean, you can say what you want people to say. Well, you know, these countries don't trust each other; they'll never get along, and that may have been true in the past. But you know, if they want to move away from dollar dominance, it's the lesser of two evils, I guess, right?
Yeah, they may have to try and get along.
Yeah.
Yeah.
So.
I mean, and here too, she's saying a natural desire to diversify.
Diversify, a natural desire to diversify. Well, that comes down to the type of assets they're diversifying into. Like, obviously, there's something going on with the traditional assets that they hold. So they're looking for somewhere to diversify to. So what does that look like? That's a very vague statement. You could go a lot of directions with that.
Yeah, and she's just saying, well, other countries might want to diversify, and that's natural. Was it natural before? I mean, you see how they're softening it?
Yeah, yeah. Well, obviously we're not at the and then they fight you phase yet. It's just you know, it's just trivia. There's nothing to see here. You know, they obviously don't see it as a big threat, but they're talking about it in couched language, so they see it as something.
Yeah.
Because you would have never heard this conversation any other time in history. Never. Not that I've ever seen.
Right. Yeah. And then we have also here the Moody's, which you mentioned is the other company that grades.
Yeah.
Now they've downgraded US banks and warns of possible cuts to others. And that's
Well,
Moody's. Again, explain Moody's is a big deal.
They're another, as I mentioned before, one of the other big rating agencies that decide who, you know, gets what credit status. And I mean, if they're downgrading banks, that's nothing, that's not a surprise, because they know we had Silicon Valley Bank and Signature Bank and some of these other, Republic Bank and Heartland Bank have been liquidated or gone down or whatever. And of course they say, yeah, that's just an event. It's over, nothing to see here. But we know that cannot exist in a vacuum. That's just the first layer of, you know, very weak status banks that had credit over leveraged and stuff. But financial institutions are so interconnected now through derivatives that once this starts, we talked about it before, the word contagion, the word they hate us to say. But this is just a sign that the contagion is working its way through the system. And now Moody's has had to step up and say, hey, look, we can't allow you to go on with your credit rating status. We have to downgrade you. And now they're threatening more. So the question is when. Yeah.
Mm-hmm.
It's obviously we're very close to something, and typically fall is when these type of things tend to go down. The fall happens in the fall.
Yeah.
So we'll see. I expect within another 30 days, you're going to see a completely different landscape. At least in the news cycle, for sure. This is just the trickle before the torrent, I think, personally.
So is there anything else you wanted to add to this, Tom?
Just a couple of little notes, just little sidebar notes of things that have come up recently. Like, we talk a lot about the US, but here's a couple of interesting, or at least one interesting statistic in Canada. I picked this up from a fellow that has a YouTube channel in Canada that's a mortgage broker, and every once in a while I'll tune in to see what he has to say. And he was saying that a guy that he knows that's in the car repossession market, typically he said he sees 1 to 2 repossessions a week, or 1 to 2 a week. He's seeing 8 to 10 a day now. Now I did the quick math on that, and that's a 25x increase from the standard for car loan. Now, this has been going on for a while in the States. It seems like Canada's, repos have been up quite a bit for the last year, but it seems like it's catching up now in Canada. So we're a little delayed on the shenanigans that are happening in the US. So we'll see how that plays out.
Okay, well, yeah, we'll see where that goes with the repo in Canada. And we can end on that note.
Yeah, I've been following the car market for a while now, expecting something to happen in Canada, because it's typically what happens in the US eventually happens here. So
yeah,
look for more of the same. All right, have a great day, folks. Thanks for listening.